Bitcoin Tools, Hacking and Trading Your Way to More Money. Written by Giles Reeves. Narrated by Warren Seegers. Introduction. Bitcoin has been in the news the last couple of weeks, but a lot of people are still unaware of them. Could Bitcoin be the future of online currency? This is just one of the questions frequently asked about Bitcoin. How does Bitcoin work? Bitcoin is a type of electronic currency, cryptocurrency, that is autonomous from traditional banking and came into circulation in 2009. According to some of the top online traders, Bitcoin is considered as the best-known digital currency that relies on computer networks to solve complex mathematical problems in order to verify and record the details of each transaction made. The Bitcoin exchange rate does not depend on the central bank, and there is no single authority that governs the supply of cryptocurrency. However, the Bitcoin price depends on the level of confidence its users have. As more major companies accept Bitcoin as a method of payment, the more successful Bitcoin will become. The benefits and risk of Bitcoin. One of the benefits of Bitcoin is its low inflation risk. Traditional currencies suffer from inflation, and they tend to lose their purchasing power each year as governments continue to use quantitative easing to stimulate the economy. Bitcoin doesn't suffer from low inflation because Bitcoin mining is limited to just 21 million units. That means the release of new Bitcoins is slowing down, and the full amount will be mined out within the next couple of decades. Experts predict that the last Bitcoin will be mined by 2050. Bitcoin has a low risk of collapse, unlike traditional currencies that rely on governments. When currencies collapse, it leads to hyperinflation or the wipeout of one's savings in an instant. The Bitcoin exchange rate is not regulated by any government and is a digital currency available worldwide. Bitcoin is easy to carry. $1 billion in Bitcoin can be stored on a memory stick and placed in one's pocket. It's that easy to transport Bitcoins compared to paper money. One advantage of Bitcoin is its untraceable nature, as governments and other organizations cannot trace the source of your funds and can attract some unscrupulous individuals. How to make money with Bitcoin. Unlike other currencies, there are 3 ways to make money with Bitcoin: saving, trading, and mining. Bitcoin can be traded on open markets, which means you can buy Bitcoins low and sell high. Volatility of Bitcoin. The value of Bitcoin dropped in recent weeks because of the abrupt stoppage of trading in Mt. Gox, which is the largest Bitcoin exchange in the world. Trading was stopped due to malleability-related theft that was said to be worth more than $744,000. The incident has affected the confidence of the investors to the virtual currency. According to Bitcoin charts, the Bitcoin exchange rate went up more than $1,100 last December. That was when more people became aware of the digital currency. Then the incident with Mt. Gox happened, and it dropped to around $530. We expect exponential growth in the popularity of Bitcoin around the world with merchants and consumers. Stephen Pear, BitPay's co-founder and CTO, is anticipating seeing the biggest growth in China, India, Russia, and South America. India has already been cited as the next likely market that Bitcoin could move into. Africa or any other country that relies heavily on mobile payments could also benefit hugely from using BTC as a currency of exchange to get around not having a functioning central bank system. Bitcoin's expansion in 2014 will be led by Bitcoin ATMs, mobile apps, and tools. The world experiences Bitcoin. More people have accepted the use of Bitcoin, and supporters hope that one day the digital currency will be used by consumers for their online shopping and other electronic deals. Major companies have already accepted payments using the virtual currency. Some of the large firms include Fiverr, Tiger Direct, and Zynga, among others. The future of Bitcoin. Bitcoin works, but critics have said the digital currency is not ready to be used in the mainstream because of its volatility. They also point to the hacking of the Bitcoin exchange in the past that has resulted in the loss of several millions of dollars. Supporters of digital currency have said that there are newer exchanges that are supervised by financial experts and venture capitalists. Experts added there is still hope for the virtual currency system, and the predicted growth is huge. Chapter 1. How to buy Bitcoin. The best way to learn about Bitcoin is to jump in and get a few in your pocket, to get a feel for how they work. Despite the hype about how difficult and dangerous it can be, getting Bitcoins is a lot easier and safer than you might think. In a lot of ways, it's probably easier than opening an account at a traditional bank. And given what has been happening in the banking system, it's probably safer too. There are a few things to learn that include getting and using a software wallet, learning how to send and receive money, and how to buy Bitcoin from a person or exchange. Preparation. Before getting started, you will need to get yourself a wallet. You can do this easily enough by registering with one of the exchanges, which will host your wallet. Although I think you're going to want more than one exchange wallet eventually, you should start with one on your own computer, both to get a better feel for Bitcoin and because the exchanges are still experimental themselves. When we get to that stage of the discussion, I will be advising you that you get in the habit of moving your money and coins off the exchanges or diversify across several exchanges to keep your money safe. What is a wallet? It is a way to store your Bitcoins. Specifically, it's software that has been designed to store Bitcoin. The software can run on your desktop computer, laptop, mobile device, except as of yet Apple, and can also be made to store Bitcoins on things like thumb drives. If you are concerned about being hacked, then this is a good option. Even the Winklevoss twins, who have millions invested in Bitcoin, put their investments on hard drives which they put in a safety deposit box. The Winklevoss twins are the ones who originally had the idea for a social networking site that became Facebook. They hired Mark Zuckerberg, who took their idea as his own and became immensely rich. What do you need to know about having a Bitcoin wallet on your computer? You can download the original Bitcoin wallet or client in Windows or Mac format. These are not just wallets, but are in fact a part of the Bitcoin network. They will receive, store, and send your Bitcoins. You can create one or more addresses with a click. An address is a number that include alpha and numerical characters to create a unique address. You will see a field where you can copy and paste an address like this from a person you want to send money to, and it will go directly in that person's wallet. You can even create a QR code, which will let someone take a picture of it with an app on their phone and send you some Bitcoin. It is perfectly safe to give these QR codes out. Take note. This type of wallet acts both as a wallet for you and as a part of the Bitcoin system. The reason Bitcoin works is that every transaction is broadcast and recorded as a number across the entire system, meaning that every transaction is confirmed and made irreversible by the network itself. Any computer with the right software can be a part of that system, checking and supporting the network. The wallet serves as your personal wallet and also as a support for that system. Therefore, be aware that it will take up to 8 or 9 gigabytes of your computer's memory. After you install the wallet, it will take as much as a day for the wallet to sync with the network. This is normal and does not harm your computer. Plus, it makes the system as a whole more secure. So it's a good idea. Bitcoin QT, the original wallet. This is a full-featured wallet where you can create multiple addresses to receive and send Bitcoins easily, track transactions, and back up your wallet. Outside the time it takes to sync, this option is very easy to use. Search for Bitcoin QT Wallet Download to find their site. Armory. Armory runs on top of Bitcoin QT, so it has all the same syncing requirements. It allows you to back up, encrypt, and the ability to store your Bitcoins offline. Search for Bitcoin Armory Wallet to find their site. If you don't want to have that much memory used or you don't want to wait for your wallet to sync, there are good wallets that don't make you sync the entire history of Bitcoin. Multi-Bit. This lightweight wallet syncs quickly and is very good for new users. Search for Bitcoin Multi-Bit Wallet to find their site. Electum. In addition to being quick and light, this wallet allows you to recover lost data using a passcode. Search for Bitcoin Electum Wallet to find their site. After you get the wallet set up, take a few minutes clicking around. There will be a page that shows you how many Bitcoins are currently in your wallet. Keep in mind that Bitcoin can be broken up into smaller pieces, so you may see a decimal with a lot of zeros after it. An interesting note, 0.00000001 is 1 Satoshi, named after the synonymous creator of Bitcoin. There will be an area showing what your recent transactions are. There is also an area where you can create an address and a QR code. You don't need a QR code if you don't want it, but if you run a business and you want to accept Bitcoin, then all you'll need to do to accept payment is show someone your QR code. Let them take a picture of it and they will be able to send you some money. You will also be able to create as many addresses as you like. This will allow you to track where the money is coming from. You could have a separately labeled address from each of your payees. There will be an area with a box for you to paste a code when you want to send money to someone or to yourself on an exchange or different wallet. There will be other options and features, but to start out with, these are the items that you should know about. Getting your first Bitcoins. Now that you have a wallet, you will want to test it out. This is a website that gives out a small amount of Bitcoin for the purpose of getting people familiar to using them. The original version of this was run by the lead developer of Bitcoin, Gavin Anderson. That site has since closed and operates by sending out 1 or 2 advertisements a month. You agree to receive those messages by requesting the Bitcoins. Copy and paste your new Bitcoin address and enter a phone number to which you can receive an SMS. They send out an SMS to be sure that people are not continuously coming back for more since it costs nothing to create a Bitcoin address. They will also send out once or twice a month advertisements to support their operation. The amount they send is trivial, 0.0015 BTC or 1.5 MBTC. However, they process almost immediately, and you can check to see that your address and wallet are working. It's also quite a feeling to get that portion of Bitcoin. Congratulations! You have just entered the Bitcoin economy. To get your feet a little wetter, you can go panning for gold. There are a number of services and websites out there that will pay you in Bitcoin to do things like go to certain websites and fill out online surveys or watch sponsored videos. These are harmless, and you can earn a few Bitcoins this way. But it's important to remember that these are businesses that get paid when people click on the links on their sites. They are essentially kicking back a portion of what they get paid to you. There is nothing illegal or even immoral about this. Plus, you might like what you see and make a purchase. They are frequently flashy and may not be completely straightforward. All the ones that I have tried, particularly bitvisitor.com, have paid out as advertised. It is interesting to experiment with these, but even with the likely rise of the value of Bitcoin, you won't become a millionaire doing this. So, unless you are an advertisement junkie, I would recommend you move on. If you would like to try, Google free Bitcoins or something along those lines and you will find numerous sites. Buying Bitcoin hand to hand. This is going to be the real test of Bitcoin. Can people easily trade them back and forth? If this can't happen, then there can't really be a Bitcoin economy, because retailers won't be able to use it. If retailers can't use it, what earthly good is it? Fortunately, this isn't a problem. The iPhone is a bit of a holdout, but many smartphones have apps, mobile wallets that will read QR codes and allow you to send Bitcoin to whomever you want. You can also display a QR code of your address, or even carry a card in your wallet with a QR code to let people send Bitcoin to you. Depending on what kind of wallet you have, you can then check to see if the Bitcoins have been received. A couple of things to note. When you set up your wallet, if you click around a bit, you will see an option to pay a fee to speed up transactions. The money becomes available to a Bitcoin miner as he, she, or they process Bitcoin information. The miners doing the work of creating blocks of information keeps the system up to date and secure. The fee is an incentive to the miner to be sure to include your information in the next block and therefore verifying it. In the short term, miners are making most of their money by mining new coins. Listen to the section on What are Bitcoins for more information about this. In the long term, as it gets harder to find new coins, and as the economy increases, the fees will be an incentive for miners to keep creating more blocks and keep the economy going. Your wallet should be set to pay 0 fees as a default, but if you want, you can add a fee to prioritize your transactions. You are not under any obligation to pay a fee. Many organizations that process many small transactions, like the ones that pan for gold, described earlier, produce enough fees to keep the miners happy. In clicking around your wallet, on the transaction page or link to specific transactions, you will see a note about confirmations. When you make a transaction, that information is sent out into the network, and the network will send back a confirmation that there is no double entry for that Bitcoin. It's smart to wait until you get several confirmations before walking away from someone who has paid you. It's actually not very easy to scam someone hand-to-hand like this, and it's not very cost-effective for the criminal, but it can be done. Where can you buy Bitcoin like this? You may have a Bitcoin meetup in your area. You can check out localbitcoins.com to find people near you who are interested in buying or selling. Some are trying to start up local street exchanges across the world. These are called buttonwoods, after the first street exchange established on Wall Street in 1792 under a buttonwood tree. See if there is one, or start one in your area. See if you have any friends who would like to try Bitcoins out. The more people who start using Bitcoin, the larger and more successful it will become. So please, tell 2 friends. Some people ask, is it possible to buy physical Bitcoins? The answer to this is both yes and no. Bitcoins, by its very nature, is a digital currency and has no physical form. However, there are a couple of ways that you can practically hold a Bitcoin in your hands. Casacious coins. These are the brainchild of Mark Caldwell. He mints physical coins and then embeds the private key for the Bitcoin inside them. You can get the private key by peeling a hologram from the coin, which will then clearly show the coin has been tampered with. Mike has gone out of his way to ensure that he can be trusted. These are a good investment strategy, as in the years to come, these coins may become collector's items. Paper wallets. A paper wallet just means that rather than keeping the information for your Bitcoin stored in a digital wallet, you print the key information off along with a private key and keep it safe in a safe, a drawer, or under your mattress, if you like. This is highly recommended and a cost-effective system for keeping your Bitcoin safe. Keep in mind, someone could steal them, or if your house burns, there will be no way to get them back. Really no different than cash. Also, as with Casacious coins, they will not really be good for spending until you put them back into your computer. There is software to make printing your paper wallets easier. BitcoinWallet.com is one of the best and includes a good tutorial about how to use them. The Bitcoins are not actually in the wallet. They are still on the web. In fact, the outside of the wallet will have a QR code that will allow you to send coins to the wallet anytime you like. The sealed part of the wallet will have a private key, without which you cannot access the coins. Therefore, only put as many coins on the wallet as you want to be inaccessible. You will not be able to whip this thing out and buy a cup of coffee. Think of it as a piggy bank. To get the money, you have to smash it. It is possible to take out smaller amounts, but at this point the security of the wallet is compromised and it would be easier for someone to steal the coins. It's better to have them all in or out. People who use paper wallets are usually security conscious, and there are a number of ways for the nefarious in the world to hack your computer. BitcoinPaperWallet.com gives a lot of good advice on how to print your wallet securely. Some people have also asked about buying Bitcoins on eBay. Yes, it is possible, but they will be far overpriced. So selling on eBay might seem to be the better option given the extreme markup over market value you might see. But as with anything that is too good to be true, this is too good to be true. As we will explain in the next section, selling Bitcoin this way is just too risky. How not to sell Bitcoin. In the next section, we are going to explain a couple of key points about buying from Bitcoin exchanges. Before you do, let me give you a warning. A short history lesson. When people first started setting up actual businesses based on Bitcoin, they used all the tools available to any merchant. They sold by credit card and PayPal. The problem with this business model was quickly spotted. Bitcoin transactions are not reversible by anyone except the recipient of the money. Credit cards and PayPal have strong buyer protection policies that make it relatively easy for people to request a chargeback. So the nefarious individuals realized this and began making purchases of Bitcoin and then sooner or later requesting a chargeback. And since Bitcoin is a non-physical product, sent by new or poorly understood technology means the sellers were not able to contest this. Because of this, sellers stopped accepting credit cards and PayPal. This was a big problem for the currency. How to move money between buyers and seller. Some businesses emerged that would credit you with Bitcoin if you wired them money. Very often, these businesses would give addresses in Albania, Poland, or Russia. The fact is that many of these did work, and there are a lot of stories on the forums of people who bought Bitcoins this way. But it took a lot of time, and in the meantime, the buyer just had to bite his or her fingernails, wondering if they would get their Bitcoins or kiss their investment goodbye. As Bitcoin becomes more acceptable and valuable, we are going to see a version of the Nigerian prince scam. So the warning is this. We now have exchanges and other businesses that allow for moving money easily onto and off of exchanges. Never wire money for Bitcoin. It was a short-lived and well-forgotten moment in the Chapter 2. Bitcoin. What is it, and is it right for your business? Okay, so what's Bitcoin? It's not an actual coin. It's a cryptocurrency, a digital form of payment that is produced, mined by lots of people worldwide. It allows peer-to-peer transactions instantly, worldwide, for free at a very low cost. Bitcoin was invented after decades of research into cryptography by software developer Satoshi Nakamoto, believed to be a pseudonym, who designed the algorithm and introduced it in 2009. His true identity remains a mystery. This currency is not backed by a tangible commodity such as gold or silver. Bitcoins are traded online, which make them a commodity in themselves. Bitcoin is an open-source product, accessible by anyone who is a user. All you need is an email address, internet access, and money to get started. Where does it come from? Bitcoin is mined on a distributed computer network of users running specialized software. The network solves certain mathematical proofs and searches for a particular data sequence, block, that produces a particular pattern when the BCT algorithm is applied to it. A match produces a Bitcoin. It's complex and time and energy consuming. Only 21 million Bitcoins are ever to be mined. About 11 million are currently in circulation. The math problems the network computers solve get progressively more difficult to keep the mining operation and supply in check. The network also validates all the transactions through cryptography. How does Bitcoin work? Internet users transfer digital assets, bits, to each other on a network. There is no online bank. Rather, Bitcoin has been described as an internet-wide distributed ledger. Users buy Bitcoin with cash or by selling a product or service for Bitcoin. Bitcoin wallets store and use the digital currency. Users may sell out of this virtual ledger by trading their Bitcoin to someone else who wants in. Anyone can do this anywhere in the world. There are smartphone apps for conducting mobile Bitcoin transactions, and Bitcoin exchanges are populating the internet. How is Bitcoin valued? Bitcoin is not held or controlled by a financial institution. It is completely decentralized. Unlike real-world money, it cannot be devalued by governments or banks. Instead, Bitcoin's value lies simply in its acceptance between users as a form of payment and because its supply is finite. Its global currency values fluctuate according to supply and demand and market speculation, and more people create wallets and hold and spend Bitcoins. As more people create wallets and hold and spend Bitcoin and more businesses accept it, Bitcoin's value will rise. Banks are now trying to value Bitcoin, and some investment websites predict the price of Bitcoin will be several $1,000s in 2014. What are its benefits? There are benefits to consumers and merchants that want to use this payment option. First, fast transactions. Bitcoin is transferred instantly over the internet. Second, no fees or low fees. Unlike credit cards, Bitcoin can be used for free or very low fees. Without the centralized institution as a middleman, there are no authorizations and fees required. This improves profit margin sales. Third, it eliminates fraud risk. Only the Bitcoin user can send payment to the intended recipient, who is the only one who can receive it. The network knows a transfer has occurred and transactions are validated. They cannot be challenged or taken back. This is big for online merchants who are often subject to credit card processor assessments of whether or not the transaction is fraudulent, or businesses that pay the high price of credit card chargebacks. Fourth, data is secure. As we have seen with recent hacks on national retailers' payment processing systems, the internet is not always a secure place for private data. With Bitcoins, users do not give up private information. They have two keys, a public key that serves as the Bitcoin address and a private key with personal data. Transactions are signed digitally by combining the public and private keys. A mathematical function is applied and a certificate is generated proving the user initiated the transaction. Digital signatures are unique to each transaction and cannot be reused. The merchant or recipient never sees your secret information, name, number, physical address, so it's somewhat anonymous, but it is traceable to the Bitcoin address on the public key. Fifth, convenient payment system. Merchants can use Bitcoin entirely as a payment system. They do not have to hold any Bitcoin currency since Bitcoin can be converted to dollars. Consumers or merchants can trade in and out of Bitcoin and other currencies at any time. Sixth, international payments. Bitcoin is used around the world. E-commerce merchants and service providers can easily accept international payments, which open up new potential marketplaces for them. Seventh, easy to track. The network tracks and permanently logs every transaction in the Bitcoin blockchain, the database. In the case of possible wrongdoing, it is easier for law enforcement officials to trace these transactions. Eighth, micropayments are possible. Bitcoins can be divided down to 1/100 millionth. So running small payments of $1 or less becomes a free or near-free transaction. This could be a real boon for convenience stores, coffee shops, and subscription-based websites that offer videos or publications. Still a little confused? Here are a few examples of transactions. Bitcoin in the retail environment. At checkout, the payer uses a smartphone app to scan a QR code, with all the transaction information needed to transfer the Bitcoin to the retailer. Tapping the Confirm button completes the transaction. If the user doesn't own any Bitcoin, the network converts dollars in his account into the digital currency. The retailer can convert that Bitcoin into dollars if they want to. No hackers can steal personal consumer information, and there is no risk of fraud. Very slick. Bitcoins in hospitality. Hotels can accept Bitcoins for room and dining payments on their premises for guests who wish to pay by Bitcoin using their mobile wallets or PC to website to pay for a reservation online. A third-party BTC merchant processor can assist in handling a transaction, which it clears over the Bitcoin network. These processing clients are installed on tablets at the establishment's front desk or in the restaurants for users with BTC smartphone apps. These payment processors are also available for desktops, in retail POS systems, and integrated into food service POS systems. No credit cards or money needs to change hands. These cashless transactions are fast, and the processor can convert Bitcoins into currency and make a daily direct deposit into the establishment's bank account. It was announced in January 2014 that 2 Las Vegas hotel casinos will accept Bitcoin payments at the front desk, in their restaurants, and in the gift shop. It sounds good, so what's the catch? Business owners should consider issues of participation, security, and cost. A relatively small number of ordinary consumers and merchants currently use or understand Bitcoin. However, adoption is increasing globally, and tools and technology are being developed to make participation easier. It's the internet, so hackers are threats to the exchanges. The Economist reported that a Bitcoin exchange was hacked in September 2013, and $250,000 in Bitcoin was stolen from users' online vaults. Bitcoins can be stolen like other currency, so vigilant network, server, and database security is paramount. Users must carefully safeguard their Bitcoin wallets, which contain their private keys. Secure backup or printouts are crucial. Bitcoin is not regulated or insured by the U.S. government, so there is no insurance for your account if the exchange goes out of business or is robbed by hackers. Bitcoins are relatively expensive. Current rates and selling prices are available on the online exchanges. The virtual currency is not yet universal, but it's gaining market awareness and acceptance. A business may decide to try Bitcoin to save on credit card and bank fees as a customer convenience, or to see if it helps or hinders sales and profit. Chapter 3. Best of Bitcoin. Top 3 Charting Tools. If you want to be hands-on with your Bitcoin investment and trade in and out of the digital currency to generate profit, you will need the best Bitcoin charting tools. In this chapter, you will be introduced to the 3 leading charting platforms you can use to make better investment decisions when trading Bitcoin. TradingView. TradingView is one of the most established charting tools in the market. It was launched in 2011 as a community platform where traders can share their analysts and trading signals. Initially, the platform's core focus was on established financial securities and commodities. Recently, however, TradingViews have added Bitcoin and a wide range of other digital currencies to accommodate the rising demand for the new asset class. TradingViews enables users to leverage a variety of technical analyst tools to analyze the price movement of Bitcoin and other assets. Technical indicators such as MACD, Bollinger Bands, and the Relative Strength Index can be used to develop technical analyst-based trading strategies. Furthermore, TradingView enables users to share their trade ideas with others and discuss them within the platform's social network. Coin tracking. Coin tracking was launched in 2013 to serve as a digital currency investment portfolio oversight and management platform. Coin tracking enables users to keep track of all their digital currency investments in one place and provide charts and trend features that allow users to deploy a range of technical analyst indicators to discover trends for all their favorite digital currencies. Probably coin tracking's most prominent feature is the automatic generation of tax reports. This is becoming an increasingly important issue for Bitcoin traders, as authorities and financial regulators are starting to keep a close eye on digital currency trading activities. The platform's tax reporting feature is excellent for busy traders who want to ensure that all their digital currency trading activities are properly reported to the taxman. Coinigy. Coinigy was launched in 2014 to provide professional digital currency traders with tools and market data to help them make better investment decisions. Coinigy not only provides historical and real-time price data on a wide range of digital assets, it also provides excellent charting tools and links in with several exchanges. Coinigy allows both financial institutions as well as individual traders to deposit funds, monitor portfolios, analyze market trends, and execute trades all in one place. If you are looking to actively manage a broad portfolio of digital assets and prefer to do so using only one platform, then Coinigy is your go-to solution. Coinigy goes beyond being a charting tool to providing a one-stop shop for digital currency investors and is therefore definitely worth its comparatively high fee. If you are simply looking to buy and hold Bitcoin, then charting tools will only play a minor role for you and your Bitcoin investments. However, if you want to take an active approach to investing in Bitcoin and other digital assets, then having the right charting tools can make a big difference in the long run. Chapter 4. 5 Best Tools to Start Trading Bitcoin. Before using a trading tool, you'll have to set up a trading account. Picking the right exchanges to trade through can be the difference between making a lot of money and losing everything. Coinbase, the easiest way to buy Bitcoin. Coinbase has raised over $100 million in venture funding from angels and VCs. They're a highly trusted digital wallet service that allows you to buy and sell Bitcoin. They make it really easy for the average person to get started with digital currencies. In fact, you can link your Coinbase account to your checking account and quickly transfer money to and from the exchange. Bitfinex, a very liquid exchange with the ability to short Bitcoin. Bitfinex is one of my favorite places for shorting Bitcoin. Aside from a few technical glitches in the past, this exchange is a reliable place for active traders. They constantly rank as one of the top exchanges by trading volume for the US dollar. Poloniex, the best place to trade altcoins. Poloniex is a newer exchange that gained popularity because they offer margin trading and shorting on many of the most popular altcoins. This is actually where they first started trading Ethereum, and thanks to Poloniex, was able to catch Ethereum's first massive bull market. Key point: don't trust exchanges to act as your bank. Look, the reality is Bitcoin trading is still the Wild West. Several exchanges have been hacked, gone bankrupt, or actually stolen their customers' digital currency. We can use exchanges to place trades and make money, but assume the worst. Don't trust them to act as a bank account. Many exchanges are offshore and don't have insurance for you. Use the best charting tools. If you want to be an active trader, then you need to use the best charting and order execution tools. The best charting and trade analyzing tool I've found is Coinigy. Coinigy is an all-in-one trading platform that has charting and order execution for all the important digital currencies and exchanges. You can link your accounts to Coinigy, actually place orders, and track your trades in a single location. They have a beautiful charting interface with all the drawing tools and indicators you need to analyze technical analysts. Set up mobile charts and alerts. So it's important for me to be able to check on Bitcoin's price from my smartphone. Zero Block is a very simple and powerful app that allows you to see a simple price chart for Bitcoin. You can also set price alerts in case Bitcoin breaks a key price level. Move your trading profits offline into cold storage. The safest place to store your digital currency is in cold storage. Cold storage means a wallet that's not connected to the internet. This keeps your coin safe from hackers and thieves. One of my favorite cold storage tools is Trezor. This is a hardware Bitcoin wallet that offers ultimate security. There are many types of cold wallets. It doesn't matter if you use paper wallets, hard wallets, or even computer wallets. Just make sure you understand how your Bitcoins are secured and stored. Join a high-value trading community. Most people that attempt to trade lose money. There are many reasons why such a large percentage of people lose money, but the top reason is the lack of training and education. Trading is a performance activity just like golf, chess, or poker. And if you don't take the time to learn the most effective strategies and techniques, then the odds are you'll lose money to more skilled traders. Once you learn the basics of how to trade Bitcoin, then it's time to join a community of traders. Chapter 5. Understanding Blockchain Technology, Bitcoins, and the Rise of Cryptocurrency. What is blockchain technology? For the past several weeks, you've likely heard some of the following terms if you've paid attention to the world of finance: cryptocurrency, blockchain, Bitcoin, Bitcoin Cash, and Ethereum. But what do they mean? And why is cryptocurrency suddenly so hot? First, we'll explain the blockchain basics. As society becomes increasingly digital, financial service providers are looking to offer customers the same services to which they're accustomed, but in a more efficient, secure, and cost-effective way. Enter blockchain technology. The origins of blockchain are a bit nebulous. A person or group of people known as the pseudonym Satoshi Nakamoto invented and released the technology in 2009 as a way to digitally and anonymously send payments between two parties without needing a third party to verify the transaction. It was initially designed to facilitate, authorize, and log the transfer of Bitcoins and other cryptocurrencies. How does blockchain technology work? Blockchain tech is actually rather easy to understand at its core. Essentially, it's a shared database populated with entries that must be confirmed and encrypted. Think of it as a highly encrypted and verified shared Google document, in which each entry in the sheet depends on a logical relationship to all of its predecessors. Blockchain tech offers a way to securely and efficiently create a tamper-proof log of sensitive activity, anything from international money transfers to shareholder records. Blockchain's conceptual framework and underlying code is useful for a variety of financial processes because of the potentials it has to give companies a secure digital alternative to banking processes that are typically bureaucratic, time-consuming, paper-heavy, and expensive. What are cryptocurrencies? Cryptocurrencies are essentially just digital money, digital tools of exchange that use cryptography and aforementioned blockchain technology to facilitate secure and anonymous transactions. There had been several iterations of cryptocurrency over the years, but Bitcoin truly thrust cryptocurrencies forward in the late 2000s. There are thousands of cryptocurrencies floating out on the market now, but Bitcoin is far and away the most popular. How do you mine cryptocurrency? Bitcoin, Litecoin, Ethereum, and other cryptocurrencies just don't fall out of the sky. Like any other form of money, it takes work to produce them. And that work comes in the form of mining. But let's take a step back. Satoshi Nakamoto, the founder of Bitcoin, ensured that there would only be 21 million Bitcoins in existence. He or they reached that figure by calculating that people would discover or mine a certain number of blocks and transactions each day. Every 4 years, the number of Bitcoins released in relation to the previous cycle gets reduced by 50%, along with the rewards to miners for discovering new blocks. At the moment, that reward is 12.5 Bitcoins. Therefore, the total number of Bitcoins in circulation will approach 21 million but never actually reach that figure. This means Bitcoins will never experience inflation. The downside here is that a hack or cyber attack could be a disaster because it could erase Bitcoin wallets with little hope of getting the value back. As for mining Bitcoins, the process requires electrical energy. Miners solve complex mathematical problems, and the reward is more Bitcoins generated and awarded to them. Miners also verify transactions and prevent fraud. So miners equal faster, more reliable, and more secure transactions. Current and future uses of blockchain technology and cryptocurrency. Since its inception, Bitcoin has been rather volatile, but based on its recent boom and a forecast by Snapchat's first investor, Jeremy Liu, it will hit $500,000 by 2030. And the prospect of grabbing a slice of the Bitcoin pie becomes more attractive. Bitcoin users expect 94% of all Bitcoins to be released by 2024. As the number moves towards the ceiling of 21 million, many expect the profits miners once made from the creation of new blocks to become so low that they will become negligible. But as more Bitcoins enter circulation, transaction fees could rise and offset this. As for blockchain technology itself, it has numerous applications, from banking to the internet. In the next few years, BI Intelligence expects companies to flesh out their blockchain IoT solutions. Blockchain is a promising tool that will transform parts of the IoT and enable solutions that provide greater insight into assets, operations, and supply chains. It will also transform how health records and connected medical documents store and transmit data. Blockchain won't be usable everywhere, but in many cases, it will be a part of the solution that makes the best use of the tools in the IoT arsenal. Blockchain can help to address particular problems, improve workflows, and reduce costs, which are the ultimate goal of any IoT project. Chapter 6. What are the advantages of paying with Bitcoin? Due to the unique nature of virtual currencies, there are some inherent advantages to transacting through Bitcoin that users of other currencies do not get. Digital currencies are a relatively new and untested medium of exchange, and users should be careful to weigh their benefits and risks. That said, Bitcoin appears to offer some unique possibilities. Bitcoin payments are processed through a private network of computers linked through a shared program. Each transaction is simultaneously recorded in a blockchain on each computer that updates and informs all accounts. Bitcoins are either mined by a computer through a process of solving increasingly complex mathematical algorithms, or purchased with standard national money currencies and placed into a Bitcoin wallet that is accessed through a smartphone or computer. User anonymity. Bitcoin purchases are discreet. Unless a user voluntarily publishes his Bitcoin transactions, his purchases are never associated with his personal identity, much like cash-only purchases, and cannot be traced back to him. In fact, the anonymous Bitcoin address that is generated for a user purchase changes with each transaction. No third-party interruptions. One of the most widely publicized benefits of Bitcoin is that governments, banks, and other financial intermediaries have no way to interrupt the transactions or place freezes on Bitcoin accounts. The system is purely peer-to-peer. Users experience a greater degree of freedom than with national currencies. Purchases are not taxed. Since there is no way for third parties to identify, track, or intercept transactions that are denominated in Bitcoins, one of the major advantages of Bitcoin is that sales taxes are not added onto any purchases. Very low transaction fees. Standard wire transfers and foreign purchases typically involve fees and exchange costs. Since Bitcoin transactions have no intermediary institutions or government involvement, the costs of transacting are kept very low. This can be a major advantage for travelers. Additionally, any transfer in Bitcoins happens very quickly, eliminating the inconvenience of typical authorization requirements and wait periods. Mobile payments. Like with many online payment systems, Bitcoin users can pay for their coins anywhere they have internet access. This means that purchasers never have to travel to a bank or a store to buy a product. However, unlike online payments made by U.S. bank accounts or credit cards, personal information is not necessary to complete any transaction. Chapter 8. Crypto Trading. What is it? Crypto trading is the act of buying and selling cryptocurrencies through a trading platform. The term crypto is the short version of cryptography, which is a structure of techniques that secret writing, especially code and cipher systems, that is sometimes used to decentralize systems for security purposes. The term trading is the act of buying, selling, or exchanging something of value. Platforms are normally provided by exchanges and are available to every single person who wishes to try to make money from the market. You might be asking yourself, why would the value of cryptocurrency go up? The answer is simple. The value changes due to supply and demand. The more demand there is for something, the more people are willing to pay for it. Or also, we can understand by this point, cryptocurrency trading is the forex, foreign exchange of cryptocurrencies. This means you are able to trade different Bitcoin and altcoin normally for USD and BTC. Cryptocurrency trading is an alternative way to get involved in the crypto world. It doesn't require mining hardware nor investing in Bitcoin hypes or Bitcoin cloud mining, which always has risk involved in their integrity. Cryptocurrency trading is a very high profit-making business, but only if you are skilled to do so then. What you should know before you start trading cryptocurrency. There are only a few things to know about trading cryptocurrency beyond what was noted above. Here are a few of the most important things to know before getting started. A cryptocurrency exchange is not part of the regular stock exchange. Below we will suggest using an exchange broker, Coinbase, but you can also use the related GDAX, the pro version of Coinbase with lower fees. Neither of these is the same as Wall Street and its exchanges. Same general mechanics, different specifics, and different entities. A beginner might prefer to trade cryptocurrency stock on the stock market. GBTC is a trust that owns Bitcoins and sells shares of it. Trading this avoids you having to trade cryptocurrencies directly. The main Bitcoin stock here in 2018 is GBTC. Be aware that GBTC trades at a premium, meaning Bitcoins are cheaper than buying shares of the GBTC trust, which isn't ideal. Also, cryptocurrency trading is a 24-hour market, where the traditional stock market is not. Learn more about the GBTC Bitcoin Trust and the related pros and cons before you invest. I think the simplest place to buy, sell, and store coins is Coinbase. But you can only buy, sell, and store Bitcoin, Ethereum, Litecoin, and Bitcoin Cash in Coinbase. If you are serious about trading cryptocurrency, you will need another exchange like Coinbase's GDAC, Bittrex, Binance, or Kraken, and you'll likely want to find a wallet to store your coins in. The cryptocurrency market is insanely volatile in 2018. You can make a fortune in a moment and lose it in the next, whether you trade Bitcoin, another coin, or the GBTC Bitcoin Trust. Consider mitigating risk, hedging, and not going long with all your investable funds. Tip: if you trade only the top coins by market cap, that is, coins like Bitcoin and Ethereum, or GBTC, then the chances of losing everything overnight are slim. Not impossible, but slim. Other cryptocurrencies are riskier, but can offer quick gains on a good day. Tip: there are a few sides to cryptocurrency. First, you can trade and invest in it. Second, you can use it for transactions, anywhere a coin type is accepted. Third, you can break out a graphics processing unit and some software and mine coins. Those are all valid and interesting. But with that in mind, this chapter is focused on trading cryptocurrency and therefore also investing in it. With that said, even if you want to do the other things with cryptocurrencies, you still need to be set up for trading. Cryptocurrency mining. As noted, one way to invest in cryptocurrency is via cryptocurrency mining. That is a valid way to start investing. Say you love computer gaming and need a new rig and want to invest in small amounts of cryptocurrency, while maybe making back some of the cost of the rig and maybe breaking even. But that is an entirely different subject. The average investor will want to trade USD for cryptocurrency on an exchange and avoid the complexities and investments of mining. In all cases, unless you already have a good rig with a great graphics card, you'll need to put down USD upfront anyway. What you need to know to start trading cryptocurrency. For those who want to trade cryptocurrency despite the previous notes, a beginner should start choosing a company with a good reputation that offers an exchange and wallet to help keep the process simple. A beginner should also start trading prominent coins. Currently, in 2018, we are referring to coins like Bitcoin, BTC, and Ethereum, ETH. In the future, this could change. Since the above is the case, a good start for any American wishing to trade cryptocurrency is starting with Coinbase.com, the most popular cryptocurrency website in America, and a service that offers a single platform for Bitcoin, Ethereum, Litecoin, and Bitcoin Cash wallets, plus a currency exchange. After you master Coinbase, then you are ready to say GDAX and other exchanges like Bittrex, Binance, or Kraken. Tip: a good first foray into cryptocurrency investing is the obvious, buying a major cryptocurrency like Bitcoin. After that, you'll probably want to trade USD for crypto on an exchange like GDAX. Once you have done that, you could try trading BTC and ETH for other cryptocurrencies. Trading crypto pairs can be rewarding, but it is more complex and often more risky than just buying a single cryptocurrency as an investment. Tip: do not do margin trading unless you know exactly what that is and are an expert. Cryptocurrency is volatile. You can end up losing all your money in an instant if you aren't careful. Tip: if you don't understand the tax implications of trading cryptocurrency, tread very carefully. There are some nasty traps you could fall into when trading coins. For one, they are not necessarily considered like-kind assets. If that's confusing, then consider sticking with trading USD for coins in Coinbase until you grasp the concept. Chapter 9: How to store your Bitcoin as securely as possible. To store your Bitcoin securely, you'll need a Bitcoin wallet. But how do they work? The key thing to understand is that no matter what you do, you won't actually be storing the Bitcoin itself. That's because a Bitcoin isn't an object, it's an encrypted address on the blockchain. What you own is a unique key that unlocks a specific Bitcoin location. And that's what you need to be protecting at all times by storing it in a wallet. With that covered, there are a few different ways to store your Bitcoin depending how secure you want to be and how much you plan to use it on a regular basis. Why you should use a hardware wallet. The easier way to store Bitcoin and other cryptocurrencies is in a digital wallet online or locally on your smartphone or computer. But leaving your Bitcoin in public view can open you up to attacks from hackers and phishing scams. That's why the best option is a hardware wallet that stores your Bitcoin offline. Most hardware wallets look like USB drives and can be easily connected to a computer. They use a PIN number for security, along with a secondary password called a seed, in case you forget the PIN. If you forget both passwords, you're pretty much screwed. So it might be worth writing the seed down somewhere safe offline. The biggest drawback to a hardware wallet is that if you lose it, you can't recover the Bitcoin. So make sure to create at least one backup on another encrypted storage device. Another issue with hardware wallets is that they can make the process of actually spending your Bitcoin a lot more difficult. The best solution is to keep a small amount of Bitcoin in a digital wallet like Mycelium Wallet that's designed to work well with offline storage devices. Finally, if you want to keep your Bitcoin offline but don't want to deal with a hardware wallet, you might want to consider a paper wallet instead. This is really just a piece of paper with your public and private keys printed on it, which can be used to access your Bitcoin. If you don't plan on touching your Bitcoin for a while, then a paper wallet is a good option. Just make sure you put your paper wallet somewhere very safe and don't forget where it is. Chapter 10. How to keep your cryptocurrency safe. 7 must-have wallets. What are the desired traits of a crypto wallet, and how hard can choosing a wallet be? The seemingly easy answer, unfortunately, does not have a satisfying answer. Convenience may come at the cost of security. Additional features may come at the cost of a steeper learning curve. More importantly, what are the traits that ultimately you value over the others? The following list is not in order of importance. Cost. Is it free? What are the drawbacks of using this wallet? Security. Does the company have a track record of security excellence? Mobility. Is it easy to keep and difficult to lose? Is it accessible anytime, anywhere? User-friendliness. Is the wallet UI intuitively designed? Can I store a range of altcoins? Convenience. Am I able to make a fast purchase when the time calls for it? Style. Do I have a weakness for cool tech gadgets? You may want a wallet that offers the best combination of the mentioned traits. Remember, all wallets have their edges and shortcomings. 7 must-have wallets. How to keep your cryptocurrency safe. KeepKey Hardware Wallet. The coolest looking tech gadget to show off to your friends. Made by a relatively new company, KeepKey offers a hardware wallet of a polished design. KeepKey is said to be a part of Trezor's code and firmware, so their main differences is the material. KeepKey feels like a premium wallet but might be a little on the heavy side and hence more susceptible to drops. It comes with a standard, simple-to-use client UI. Nano Ledger S Hardware Wallet. Nano Ledger S is just as secure as the other 2 hardware wallets. It is popular because of its relatively low price of $65 compared to its competitors. Being smaller than KeepKey, it is more portable and easier to carry around. It's a hardware wallet that comes at a very competitive price. Trezor Hardware Wallet. Trezor is one of the first movers in the hardware wallet industry and sets the gold standard for crypto security. Trezor has a reputation for providing top-notch security, protecting against both virtual and physical theft. What Trezor lacks in style, it more than makes up in the security department. Even if your PC is compromised with malware, your private keys will be safe with Trezor. In this sense, Trezor is more of a vault than a wallet. Coinbase Hot Wallet. Coinbase is an online web-based wallet and is the beginner-friendly version of GDAX. As a hot wallet, you can easily transfer to GDAX exchange instantly and for free. In the same interface, you can make quick purchases with fiat. What's more, 100% of your crypto holdings on Coinbase is insured. You can activate two-step verification and a Google Authenticator for more protection, and Coinbase even has a vault available if you wish to trade convenience for an added layer of security. The only drawback is that Coinbase only offers Bitcoins and Ethereum wallets. My Ether Wallet Paper Wallet. Paper wallets are for those who wish to have their own private wallets without forking out cash for hardware wallets. The money saved could be invested in their coins. Simply generate your wallet online at myetherwallet.com and note your private keys. The website does not store or transmit any of your private information. If you don't trust the online version, you can even download it from GitHub and run it offline. Paper wallets are free, but it requires an in-depth knowledge to set it up properly. In short, these types of wallets generally take a lot of hassle and are not advised for novices. Jack Software Wallet. Carrying your crypto around safely and conveniently is no longer a distant dream. Behold Jaxx, the world's first mobile wallet solution. Versions for iOS, Android, desktop, and browser are now available. Jack uses a mnemonic seed to back up your wallet or transfer it to a different device. Jack allows you to receive your funds, scan QR codes, write your crypto holdings, all in one intuitive app. Advanced features such as shapeshift integration and multiple platforms wallet linkage makes this the preferred wallet for the tech-savvy. The only drawback with this wallet is that it might have a steep learning curve, and features might not be stable with all the new integrations. With time, this will prove to be a promising solution. Electrum Software Wallet. Electrum is a fast, lightweight wallet for desktop and mobile users. It has a long list of supported features to make it the most flexible wallet today. It offers cold storage solutions, integration with hardware wallets like KeepKey, Nano, Ledger S, and Trezor, and able to achieve anonymity with Tor. On the security side, Electrum enables multi-sig support, and it is not tied to a centralized server, so server downtime will not be an issue. Overall, Electrum is the established software wallet solution out there that warrants a try. Conclusion. There you have it, folks. With this, you now have both sides of the coin. Bitcoin, as you can see, is not perfect. It does have many advantages that physical currencies do not provide its users. However, it also has its disadvantages. This is mostly due to the fact that Bitcoin is still a relatively young and new currency. People are just beginning to become more aware of it. In order for Bitcoin to succeed, more people need to understand what it is and not let their preconceived notions distort the concept of the digital currencies. There are always pros and cons to any situation in life. To be able to make a good decision, you need to weigh the good and the bad thoroughly before finalizing your choice. Do the same for Bitcoin. Understand what it is and decide what you want to do with it. We at Coin Report give you the facts. You are the ones who make your decision. Thanks again for buying this audiobook. If you have a minute, please leave a review. I take reviews seriously and always look at them. This way, you are helping me provide you better content that you will love in the future. A review doesn't have to be long, just 1 or 2 sentences and a number of stars you find appropriate. Hopefully 5, of course. If I think your review is useful, I will mark it as helpful. This will help you become more known on Amazon as a decent reviewer and will ensure that more authors will contact you for free ebooks in the future. This is how we can help each other. Disclaimer: the information is provided as is. The author, publisher, and/or marketers of this information disclaim any loss or liability, either directly or indirectly, as a consequence of applying the information presented herein. or in regards to the use and application of said information. No guarantee is given, either expressed or implied, in regards to merchantability, accuracy, or acceptability of the information. The information within this audiobook have been copyrighted. This has been Bitcoin Tools, hacking and trading your way to more money. Written by Giles Reeves. Narrated by Warren Seegers. Copyright 2018 by Giles Reeves. Production copyright 2018 by Giles Reeves.